Hello guys, it's Max here from Daily Market Movements, and just before I start today's video, I just want to make you all aware of the trading signal service that we provide here. If you would like to buy our trading service and join our amazing signal team, and you can do so simply by visiting our website. I'm going to leave our website link below this video in the description of this video, so if you do want to join the team, all you have to do is simply scroll down now, click on that link, which will then take you to our site, and then that's where you'll see that we charge a very small fee of $249 for a year's membership, so it really is great value for money. However, in front of me is the crude oil futures chart, and as you can see today, we haven't really done much. We rallied before the US markets opened, so during the European session. However, since the US markets have opened, we have paired our gains, and we're now trading back in the red, currently at $37.21 a barrel. Crude oil, you know, if you watched my videos last week, I am bearish in the short term. You know, we got that daily close below the 50-day EMA, which is the red line on our screens, and since that moment I've been telling our viewers here to short the market, and as you can see, we have fallen a couple of dollars since we did get that daily close below the 50-day EMA. So well done to everyone who managed to profit off that. I know our signal team, we profited off a sell signal in crude oil last week, so well done to everyone. You know, I think we got a bit too bearish a bit too soon here. The RSI, as you can see, was at 56 and we plummeted all the way down to 26, which basically tells us that we were oversold on the daily chart. And as you can see, the oil markets did pull back. We were trading as low as $36.33, and we have given back $1 here, so we have paired our losses ever so slightly. But I think that's just to recover territory on the RSI. The fundamentals just aren't looking great at the moment for oil, especially with regards to OPEC. I think Iraq are now threatening to leave the pact, which will kind of have a dominoes effect on other countries which are in the OPEC organization. I think some nations now are just getting very frustrated with the oil cut regulations that OPEC have decided to implement at this moment in time to kind of basically cut the supply of oil. You know, it's economics 101, the less of something that there is, the higher the price, and that's what OPEC have strived to do during this pandemic, because the oil prices crashed to minus $44 back in March, you know, as you can see on this chart. So OPEC, you know, by implementing that new rule of cutting the oil production around the world, as you can see, it kind of helped oil, Brent oil and crude oil kind of regain a lot of territory. And we were trading as high as $41, but we got rejected from a 200-day EMA. We got the daily close below the 50-day EMA, and now it looks like we are on our way to this black line, which is around that $34 a price area. And the reason that I'm aiming towards that price area is because that is the bottom of the gap that we formed back in March. Typically, a gap either acts as resistance or support, and that's exactly what we saw. This was the top of the gap, and we failed to break above the top of the gap, and that's what's kind of sent us back down towards the bottom of the gap, which is around the $34 level. I think what we're trying to do now in oil is we're trying to create a range. Oil typically does this. It finds a $10 to $15 price range, which it can bounce between, you know, for a year or even up to 2 years. If I zoom out on this chart, prior to the global pandemic, we were trading within a $15 price zone all the way back, basically to all the way back to January 2019, and we basically did that for a whole year up until the start of January 2020, and of course a couple of months after that's when a global pandemic hit, and that's when we saw a massive crash in demand for oil, and therefore that's why we saw oil prices go to an astonishing minus $44. But I think that's what we're trying to do now. We're trying to establish a new range here on the crude oil markets. You know, I think we've hit our roof in the market, which is at $45 a barrel area, and I think now we will now come to the bottom of that gap, which will be that $34. So that's a nice $10 price range which we can be trading between. I am bearish short term on crude oil, but I would happily buy crude oil at around $34 a barrel, aiming back up towards $44. So short term bearish. Longer term, it's difficult to say at this moment in time, as we are basically in the middle of the range, but there is money to be made here on the crude oil. I just think that we're just trying to regain some territory on the RSI before we start our next leg back towards the downside, where we then come into contact with that $34 price level.